Hi, welcome to our first A4S at COP26 live broadcast from Glasgow. I'm Jessica Friess. I'm the Exec Chair of the Prince of Wales's Accounting for Sustainability, and I am really pleased to be here on Finance Day talking through some of the headlines that we're already hearing of relevance to the finance and accounting community, and also exploring what some of the announcements that have already been made mean for the finance and accounting world. As many of you know, A4S is an initiative set up by His Royal Highness the Prince of Wales in 2004. So we've been working on the role of finance in creating a sustainable future for a long time now. Last night we had our Finance for the Future Awards, and it was fantastic to see some of the really practical, inspiring examples that many amongst the finance community from around the world are taking to bring commitment to action. And that's a really key focus of the work that we're doing at A4S, and a theme running throughout the COP26 conference. We need to be making tangible commitments to action to keep global warming to below 1.5 degrees centigrade. We know that we're off track, but we are seeing more and more commitments to action, and that translation into what can we actually do in practical terms and in the near term with the kind of pace and scale and urgency required to have a sustainable, habitable world for all of us. I'm going to be joined today by 4 guests who are going to be talking through some of the headlines and what they mean for you. I'll be introducing those guests as we go, but briefly, I'll be joined by Rishi, Kalra, the CFO of Olam Food Ingredients and member of our global CFO leadership network, Nusseibeh, who is the CEO International of Federated Hermes, who will be able to share the investor perspective, Janine, Guillot, who is the CEO of the Value Reporting Foundation and heavily involved in the ISSB Foundation's Technical Readiness Working Group. Big announcements ahead on reporting, which she'll be talking to us about. And joining her, Veronica Poole, Vice Chair, UK Deloitte, and also involved in that ISSB Foundation work representing the World Economic Forum. Some of the headlines that we will be exploring. So today, we've already seen some of the announcements from GFANZ, an initiative that Mark Carney has been bringing together, and he's talking about $130 trillion of private capital committed to net zero and transforming the economy. Commitments from over 450 firms from across 45 countries. And this is clearly key. We know that we need that kind of level of finance to be shifting to sustainable outcomes. The key is going to be in the detail. So how are those commitments translated to action? I'll be asking Saka his views on that. And also transition plans. This is a key demand from investors. The Chancellor of the Exchequer here in the UK, Rishi Sunak, is announcing that for UK organisations, they will need to be disclosing those transition plans. What does that mean, and what would a good transition plan look like? And finally, reporting. A big announcement today from the ISSB Foundation. So will sustainability reporting be part of the financial reporting mainstream? That announcement goes live at 10:45, so we will be speaking to Janine and Veronica and Saka to understand what that means for you. So first, I would like to come to a message from our founder, His Royal Highness the Prince of Wales, shared last night at our Finance for the Future Awards, setting out his vision and some of the work and actions that we all need to take to achieve a sustainable future.
Ladies and gentlemen, I'm delighted to be asked to share a few remarks on this, the 9th Finance for the Future Awards, hosted by my Accounting for Sustainability project in partnership with the Institute of Chartered Accountants and Deloitte. Now, I'm only so sorry that I'm not able to be with you in person, but am instead zooming in to the live events in London and Glasgow, as well as broadcasting to those of you joining online. These awards, celebrating as they do practical examples of the role that finance can play to turn commitment into action could not be more timely. Finance really does hold our future in its hands. Unless we can unlock private sector resource, innovation and finance, with the public sector setting a framework of incentives and regulation, we simply do not stand a chance of solving the existential crises we have engineered for ourselves over the years. Over the past 19 months, my Sustainable Markets Initiative has brought together over 300 global CEOs, forming a coalition of the willing. They have over $60 trillion in assets under management, and crucially, a determination to direct tens of trillions of dollars towards sustainable investment by 2030. With invaluable support from the world's 4 largest accountancy firms, including Deloitte, we are identifying the roadblocks to sustainable growth and the practical solutions which would shift them out of the way. Earlier this year, I announced the Terra Carta, a practical blueprint for action with 3 key priorities identified by participating CEOs. Firstly, a framework that will help drive finance and investment from the private sector to the highest priority sustainability projects around the world. Secondly, 10 Terra Carta transition alliances aiming to drive tens of trillions of dollars in sustainable investment and industry action for transition across 10 of the highest emitting and polluting industries. And thirdly, recommendations on the market signals from governments that would help the private sector and private investment accelerate their efforts across industries. Underpinning these priority areas, and I'm sure of particular relevance to you as finance and accounting professionals, is access to the data and metrics necessary to inform decisions. When I first established Accounting for Sustainability back in 2004, my aim was to help ensure that we were not battling to meet 21st century challenges with, at best, 20th century decision-making and reporting systems. I'm relieved to hear that 17 years later, so not before time, real progress is being made. Tomorrow, a key focus of discussions at COP26 will be on finance, including, I hear, the establishment of the I4S Foundation's International Sustainability Standards Board. Accounting for Sustainability, A4S, has contributed to this progress by bringing together many of the key global organizations involved in the reporting arena. Firstly, through the establishment of the International Integrated Reporting Council at a roundtable that I hosted in 2009, and then the Task Force for Climate-Related Financial Disclosures in 2015. Additionally, A4S works with CFOs and investors to support the practical adoption of reporting frameworks to drive better decisions. I am delighted that A4S is working closely with the SMI across the 10 Terra Carta transition alliances to develop and adopt these sustainable accounting approaches within these key sectors. Of course, having the metrics and data to measure and report on progress is critical for informed decisions to be taken, but far from sufficient. As the Finance for the Future awards show, integrated thinking and decision-making are absolutely critical. An understanding of a company's impacts on nature, people, and planet needs to be embedded into every decision that is made, taking into account the true value of natural and social capital. Ladies and gentlemen, since the awards were created, there have been over 226 finalists from more than 35 countries, demonstrating the power of finance to achieve the innovation we need to embed nature, people, and planet into decision-making and to communicate that all-important integrated approach through their reporting. I can only urge you to take inspiration from these finalists and to turn commitment into action. Now, I'm sure that you are all eager to find out whether you have won the awards this evening, and I understand that they have been particularly competitive this year. So I will, if I may, conclude by congratulating all of the finalists and winners and leave you with one final point. In the build-up to and during COP26, it is encouraging to see so many from the private sector making ambitious commitments to net zero. However, with action on climate change, biodiversity loss, and a just transition more critical than ever, I'm afraid, ladies and gentlemen, that I'm relying on you all to turn commitment into action and set an inspiring example to others.
So I would highly recommend that you do go to the Accounting for Sustainability website to find out who did win those awards last night and to learn more about the kind of actions that those organisations are taking. Some really inspiring examples. I'm really delighted to be joined in the studio here today by Saka Nusseibeh, CEO of International Federated Hermes, and we'll also be joined via Zoom by Rishi Kalra. Rishi is the CFO of Olam Food Ingredients. So welcome as well, Rishi. Delighted to have you with us.
Hi, Jessica. Hi, Saka. Good to see you both.
Fantastic. Thanks a lot, Rishi. So I would love to come to you first, Saka. Today's Finance Day at COP, there's a huge focus on the role of finance, and Federated Hermes, as an investor, has really been leading the way in terms of what sustainable investing really looks like. I'd love to hear first, what are your headlines from COP so far, whether some of the announcements today already at Finance Day or in the last couple of days?
So thank you very much for hosting me today. And let me start with a general point. We were talking just before we came into the studio about the difference between this and COP Paris. And in COP Paris, we were there, and finance has just begun to think about carbon as being a financial issue rather than being integral to the way that you, in fact, invest. Now, we at Federated Hermes, in fact, in our predecessor firm, we at Hermes have always said that this is the wrong way of thinking about it, that it's got to be holistic. In other words, it's got to be systemic in everything you do. And indeed, as we heard from His Royal Highness, he has been saying the same thing, and through A4S and other initiatives which we've been part of for a long time. So that is the sort of the background. So what is happening is two things that I think are worth taking note. First, the commitment of the great investors of being here and committing. Now, the investors themselves don't own money, they're simply agents. But the fact that they're here, and we've heard some of the great leaders talk, is a major thing. And then the second part, which is equally important, is the actual announcements. Aside from the Glasgow Declaration, there was the announcement which I made in yesterday's plenary meeting about the alliance of 30 signatories about deforestation, and a commitment to try to eliminate by stewardship and engagement, and this is important, to try to eliminate by stewardship and engagement from our portfolios by 2025 deforestation through commodity products. That's very important. The assets represented by these asset managers comes to just under 9 trillion, 8.7 trillion. Now that's a real mover in the market. That commitment is there, and the names are out so people can see for themselves, and it includes some of the major houses that we have in the UK. So that's one of them. And the second one, of course, is again another initiative by His Royal Highness, which is the Investment Alliance, the Natural Capital Investment Alliance, which we are signatory of, which is again trying to move investment into natural-based investments or nature-based investments. But all of that has got to be understood within the context of systemically changing the way that you invest so that everything that you do is sustainable. And I think that's the shift that's happening.
Yeah, fantastic. And Rishi, maybe I could bring you in here because, of course, for Olam Food Ingredients, some of those announcements that from an investor perspective, Saka was mentioning, whether around deforestation or natural capital more broadly, given the sector that you're in, within that space of really producing some of those ingredients, and as an organisation that has made some pretty strong, ambitious commitments in this area. What does that mean for you as a CFO? How should other CFOs and the finance teams respond to some of these investor demands and stay ahead in terms of really concrete action?
Thank you, Jessica and Sekar. Very pertinent points you raise. As I see it, I think from a CFO standpoint, as an organizational standpoint, while all these commitments are good to hear, they're only as good as the delivery that can happen. And in the past, there was always this risk that big numbers will be talked about, but given that it was so far in time, there was no real credible data underpinning to make them happen. And what I'm also hearing, I think it'll be announcements already made or expected to be done, that there is also now going to be enough pressure on greenwashing on some of these commitments as well. It is not only making a number, it is about underpinning data and governance that will make it real. And that is where I, and as CFOs, as finance organizations, or in companies overall, have to be focused upon. The commitments that have been made, are they really credible? Are they really underpinned by data? Are they science-based or not? Is there enough baseline work that has been done? And are they milestones that can be measured and tracked year on year? It cannot be a 2030 or a 2050, which is there to achieve, and we only come to know of it when the time has passed. So as I see it, there is a lot that finance team, CFOs have to step up to ensure that the baselines are correct. They've all been validated, prepared with the relevant data sources. And there's enough governance to keep tracking reporting, which is also what investors would like to see. It is not only about a statement at a point in time, it is about the progress and the traction from here on, year on year. Some of the things that I have picked up and also was called out in some of the announcements over the course of the COP2.
Fantastic. Thanks, Rishi. And I'd love to come to that point from your perspective as well, Saka, because I think that there is that danger. I mean, 2050, that's so far out in the future. Even 2030, as Rishi was highlighting there, we really need some of those near-term milestones to be able to assess whether the commitments are being delivered upon and what some of those staging posts are. We know that it's also going to get harder as we get into the future. So the deep cuts need to happen now. How will you hold companies to account, but also who's holding you to account?
Exactly right. And I mean, physician, heal thyself, right? There are several factors that I think will help in shifting promises into action. One is all the work that's being done on transparency and reporting. And this is where the standards that we talk about are so important. Even if we might think that some of the standards are not accurate enough, it doesn't matter. You have a starting line that you start reporting. TCFD comes to mind and the great work being done. We announced, and we're part of the work done by the Bank of England and the FCA on how companies can report on themselves, investment companies, and how investee companies can report on themselves in a way that's meaningful. So I think that's the first one. I think the second one is that there has to be differentiation between trying to just hit targets because you want to hit targets or actually trying to make a change. And that's why I started this conversation talking in general rather than in specific declarations. And I agree with Rishi, we can make all the declarations, but it's a mind change. There was a great African-American called Marcus Garvey, and he was talking about something else, but he says, free yourself from mental slavery. None but ourselves can free our minds. What he was saying is you've got to make a shift in your mind. And so we've got to understand we're not doing this to hit targets. Hitting targets is irrelevant. We're doing this because, like Her Majesty the Queen said, we owe it to our children and our grandchildren, because where we're going right now at 2.7 degrees is not good. That is why we should do it. And by the way, it is financially more sensible because you will make more money in the long term if you do this. So I agree with Rishi. And transparency is the key, and holding people to account is the key. And I think public pressure. I mean, we should hold each other to account.
Yeah. One of the things that is being talked about in the announcements today to help provide that kind of transparency and holding people to account is this point on transition plans. So I'd love to hear from both of you. What would you see as a credible transition plan? What kind of things would, as a business, Rishi, what kind of things are you already putting into the transition plan that for Olam Food Ingredients you've been working on? And Saka, as an investor, what kind of questions will companies be being asked on their transition plan. So Rishi, coming to you first.
Sure. Yeah, no, so Jessica, and before I come to that, I would like to also react to some of the things that Sekar mentioned, which is absolutely right. It is about embedding. I think that was also picked up by His Royal Highness when he spoke yesterday. It is about a cultural change. It is not only about getting some targets and meeting them. It is about knowing that this is real, this is important. There is a cost of action and a cost of inaction too. So there is really, if once you start appreciating, understanding it, then the transition also becomes fairly straightforward because you are able to see value in it. The problem has been till now, it has been seen as more as a cost, which is not really true. As in many previous discussions that we've had, clearly demonstrated for a business like ours, we can see value in this. In short, it is also about keeping us in check, because if we don't do the right thing, we may not even have a business in the future. So the transition is not only about being prepared for an eventuality, it has to be prepared for that the business might not even exist. And beyond that, it really comes down to if you see value in that, you'll make some very, very clear decision, because end of the day, we are all corporates. We're there to create some commercial value. And once you see that value, then the whole shift and the change is very, very clear and simple. So I hope I've answered some parts of that, but that is really how we see it. And I can talk about many examples. I can talk about a bee story. I can talk about how we look at our plantations. But things that really make it happen is because we've seen value in it. And the cost of action and inaction, both once measured properly, gives you the right insights.
Fantastic. And if we've got time, I'd love to come back to some of those examples. But Saka, coming to you first. So thinking transition plans, the kind of questions you'll ask companies.
Absolutely. So again, a general point. Some 30 odd years ago, a man called Ralph Catano-Pass, the first CEO of my firm, invented something called stewardship. It's not just voting. It's actually talking to people like Rishi. We're not in a position to tell him how to run his business. That is a nonsense. What we're in a position to do is to sit and say, we agree that this is in the long-term best interest of the company for sustainably carry on making money. It's sustainable wealth creation, if you like, because that is our job. So let's talk together, and then let's find out your targets that make sense to you from a financial point of view, to us from an end net zero point of view, and then we'll hold you to account on that. And in this, we will act as partners. A lot of investing is simply trading. Trading is not partnering with the business. It's not responsible investment. You don't own the company. You don't feel responsibility for it. You simply buy and sell the shares, betting on the market, red or black. So that's the first thing. Secondly, physician here, myself, what is our transition? Because we have our own issues. And for that, we publish our own targets and we hold ourselves to account to them. It is that combination. And it comes right back to this idea. And one last word. In all of this, there's a danger that people in trying to do the right thing, because they believe very strongly, but also in trying to hit the targets, will enter into the zone of exclusion. I don't like company X, therefore I will sell it. Selling company X from the portfolio does not solve the problem. It is still producing carbon, it is still producing methane, it's still cutting down forests. The way you solve the problem is you talk to the company, you agree on an action course that is beneficial to the company, therefore to your shareholders, and you execute it. That's the way forward.
And what happens when that company doesn't listen or respond?
So that is the question. I think we have to develop something that we used to have in the 19th century here in this country, which is public condemnation. And I think you do see that. You do see consumers moving. I'm not going to mention names because of my position as an officer in an American quoted company, but there's a very famous fast coffee company that reacted very quickly when the population in this country was unhappy about it using perfectly legal means to minimize the tax it was paying to this country. So the public can move. The reason that people are moving to electric vehicles and the manufacturers is because the consumers moved. The consumers moving their eating habits, the consumers moving their clothes habits. So there is a massive movement. The public has a place to play. We all do. It is our planet. We all should work together on this.
Yeah. And of course, there are a lot of drivers that are pushing companies, investors, those that are value-driven and really, I think, ahead of the curve, but also for most organisations, you're seeing that real upswell of action and pressure from, whether it's from investors, from other companies along the business value chain, from civil society, consumers, governments. So I think you really are seeing a lot of these forces come together. but there do remain some quite significant barriers to action. So what kind of things can we expect or hope from the remaining 10 or so days here at COP26 that each of you are keen to see? And what kind of practical steps should investors and businesses be taking after COP? Because this is a moment in time. It's not going to be the end of the journey. Rishi, coming to you first.
Sure. So the first and foremost is, I think, the IFRS Foundation making, so today, hoping to get that out and understand and see what really is being announced. But that will set the tone, because many organizations and finance teams have been a little quiet. I don't want to mince my words over here, because they have been waiting for this eventuality. And those who have been prepared and ready because they embedded it within their businesses and their processes will find it a little easier. But what will happen is that this is now here and now. There's no tomorrow. And there will be requirements, expectations to start reporting on it in a different way. So there will be some call to action coming from, we call it a stick, but it was an important one. But what is going to be important is that how do we make these standards? How do we make it both understandable to the organizations, to investors, and anybody who sees these numbers, because they have to be very comprehensive but clear. And that really will be the challenge. Don't want too many new jargons and terminologies coming out. But what is important is how do we bring it all together in a language that is easy to understand. And I always say that it was till now more concept. When it becomes numbers, it has to be dollars and cents, clearly showcasing year on year, milestone by milestone, the change and the transition that is happening or not.
Thank you, Rishi. Saka, same question to you. So what are you hoping for and what after?
So as many commitments as we can get from the financial institutions here, that is a step, but that's not by itself enough, because we don't represent the entire world, and there is the United States that needs to come on board in the same way that we have. The second one is a change in the way that we do accounts of companies. As His Royal Highness quite rightly pointed out, the accounting that we use is a product of the Companies Act of 1930. The American one is simply a copy of it. And it dealt with a problem that was there and then. It doesn't deal with today. There has to be an acknowledgement of the value, the added value, not the cost, the added value of investing sustainably and the added costs of not investing sustainably, and therefore that needs to be represented in the valuations that everybody, CFOs, investors, the public at large, governments use. And that means shifting the scale. And therefore, the next thing we're waiting to hear, I think, is whether the United States would develop its lexicon to allow people to have this long-term horizon. I think they do already. In fact, in the United States, if you say you're doing something because you're doing it for the long term and that you believe it has value, they will let you do this. But we need to move a bit further and say, if you don't do this, you're detracting value. That was the whole issue of stranded assets. And actually, the concept of stranded assets did move the dial. It's an accounting concept, if you think about it. So we need that to change.
Fantastic. Well, thank you both for your remarks and reflections on COP so far, some insights into Finance Day, what that means for finance and accounting community. And we will be coming next to Janine, so I'm sure that she can provide some of that international perspective from a US audience. So thanks to Rishi as well. And Saka, you'll remain here in the studio to reflect on this latest development. Now, in a couple of minutes' time, we expect to hear from the IFRS Foundation in terms of developments. So I'm here joined in the studio when we go live with that announcement to hear from Janine, who's been very heavily involved, joining us by Zoom in the middle of the night in San Francisco. So welcome, Janine. Fantastic to have you with us. And then, of course, Saka has also been heavily involved. Now, before we go live with that, and Janine, I'll come to you to share the details of what is due to be announced. Just to give some context from an A4S perspective. So I think for us, this is a really key moment. When the Prince of Wales set A4S up in 2004, as he highlighted in the message we shared from the Finance for the Future Awards, he really underlined that we were battling with 20th century reporting and decision-making systems and accounting really not fit for purpose for the kind of challenges we face in the 21st century. One of the areas as a key focus. We focused on how to embed into decision-making. The whole question of management accounting is key as well. You need that end-to-end process. But of course, without the data, without the reporting, it remains a barrier to action. And without sustainability information being at the heart of financial reporting. So back in 2004, we did a lot of work. 2010 was a key milestone. We set up the International Integrated Reporting Council, which is now part of the Value Reporting Foundation, of which Janine is CEO. And today, the IFRS Foundation will be announcing, I think, what is a key milestone in realizing that vision that we first started working on through the IRC and then the TCFD more recently. So Janine, over to you. I'd love to hear from you. What is today's big announcement from the IFRS Foundation and the Value for Reporting Foundation?
Thanks, Jessica, and it's great to be here, even in the middle of the night, my time. And I do want to say, I remember when the IIRC was established, and it was such a significant milestone. And it's thrilling to be here today to be able to talk about how far we've come. So the IFRS Foundation is making 3 significant announcements today. 2 of them, I think, widely expected. One of them, I think, is going to be more of a surprise. One is the formal decision to launch the International Sustainability Standards Board, which I think was widely expected. The second is the release of 2 prototype standards, one on climate disclosure requirements and another one on general sustainability disclosure requirements. Those prototype standards were developed by the IFRS Foundation Technical Readiness Working Group, of which the Value Reporting Foundation was a part. Those are intended to give the new ISSB a running start and ultimately become the basis of exposure drafts that could be issued by the ISSB. And Veronica Poole is going to talk a little bit more about those documents a little further on. And then the third announcement, which I think was not as widely expected, is that the IFRS Foundation has entered into a commitment with the Value Reporting Foundation and with CDSB, ultimately to consolidate our resources into the IFRS Foundation and the ISSB to help support the launch of the new board. So that right now is a commitment. We expect to close the transaction by June 2022, but I think this is a landmark, absolute landmark development in the history of information and ultimate structure.
Fantastic. Thank you, Janine. So I think that's a pretty big progress. And I think, for me, one of the things that will be very heavily welcomed is that this isn't creating yet another organization. And I think that is one of the reasons why it's such a huge development in terms of, as you said, that last piece of the news. I think it was widely expected. I think, in fact, probably most people already thought the IFRS Foundation had created or committed to creating the ISSB. But this is the formal announcement of that, the formal end of the process. But Janine, I'd love to hear a bit more. So a lot of people have already been using the IR framework, SASB standards. What does it mean for them, both in the interim and then what they might be able to expect as that folds into the IFRS Foundation?
Sure. So one of the things that was most important in the trustees leading up to making their decision, and they went through a very rigorous process to ultimately make the decision to launch the ISSB. And the feedback they got consistently through the process was to leverage existing standards and frameworks. Please do not reinvent the wheel. They heard that time and time again. And so the expectation, especially with the acquisition of the VRF and CDSB, is that the ISSB standards will ultimately leverage the SASB standards and TCFD, CDSB, and very importantly, the integrated reporting framework to provide connectivity across the traditional financial accounting standards and the new sustainability standards. So that's a long way of saying that definitely for anyone who's using the integrated reporting framework and the SASB standards today, continue to do that and continue to move forward, because the expectation is that the new ISSB will ultimately leverage both of those.
And I mean, for a lot of people out there, reporting is obviously key. And as Rishi was saying, for CFOs, it's a core part of their role. Investors rely on that information. But why is the IFRS Foundation's involvement and this coming together of some of the existing strands of reporting that have been very much developed in the voluntary space, why is it a game changer?
Yeah, so I want to go back to something Saker said earlier, which was really important about the development of financial accounting standards, which today we take for granted. We take them for granted as if they've been around forever. They actually haven't been. The whole concept of generally accepted accounting standards really only came into being post the Great Depression, after the early U.S. Securities Acts in the 1930s. And then the Financial Accounting Standards Board, the International Accounting Standards Board, they've only been around for decades. But it was really that development of financial accounting standards that enabled markets to scale globally. Financial accounting standards gave businesses and investors a common language to talk about financial performance. That was such an important development in the history of financial markets. And what we really think is that now the launch of the ISSB is the path to giving businesses and investors a common language to talk about sustainability performance and how sustainability performance connects to valuation of enterprises and long-term financial performance. So this is in my mind just a historic development, and the development of market infrastructure. I really think of accounting standards as core market infrastructure, and this is, and I love the use of the word 21st century market infrastructure. That's what this is. It moves the accounting standard setting world to be 21st century market infrastructure.
And in terms of some obstacles, what kind of challenges do you think will be faced that will need to be overcome to realize some of this potential that you're talking about in terms of the International Sustainability Standards Board? And this relates to a few of the questions that we've had from some of the audience, sort of touching on things like sort of regulating reporting and making sure that this doesn't lead to more greenwashing, something that Saker, Rishi and I were talking about earlier, and where some of the biggest barriers to really sustainable accounting still lie. So Janine, what kind of obstacles are there and how can we overcome them?
Yeah, so I think there are quite a few. So it's going to take everyone's commitment to making this a success. One is just going to be communication, and just everyone really level setting all market participants on what this is, what it means, how to engage. We've used the word jokingly alphabet soup for so many years that a lot of people have just almost thrown up their hands and said, this is too confusing. And so I think really communicating and helping everyone understand what this means, how important it is, this is a road to a solution. I think that's the first challenge. Second challenge is just going to be that expectations are sky high. And I can tell you that sustainability accounting standards development is not easy. Doing it on a global basis, the new board is going to be committed to doing both thematic standards like climate standards and industry-specific standards, development of the original SASB standards, which many of you know, for 77 industries took 6 years. and multiple rounds of public consultation. So just want to be clear, it's not a simple task to do global sustainability disclosure standards. And that comes to the third challenge, which is it's possible. And it's going to be possible if market participants, both businesses and investors, commit to engage in the process. And that, to me, is going to be one of the most important things, which is, if you think about back to accounting standards, CFO teams are very, very used to engaging in an accounting standards development process. They usually have accounting policy teams that devote resources to engaging in the standard setting process. It's going to be a mindset shift to similarly think about engaging in sustainability standards development. But I think if both investors and businesses commit to doing that, the ISSB has the potential to be a really significant game changer and success.
And I'd love to pick up on one of the challenges that you touched on there and around the global nature of the standards. Now, of course, the IFRS Foundation is, a lot of people think of it as setting the standards, but of course it's governments that adopt the standards. And so that whole question of mandatory reporting and really getting governments around the world to be adopting these standards. Saka, you were touching earlier on the US. Janine, you're talking from the US. That was one of the real drivers for SASB's foundation, was to equip the US market and drive more reporting and disclosure from the US participants. How would you see that evolving? We already know that the EU has focused on a broader set of sustainability standards, so looking at what they're calling double materiality. We know that the IFRS Foundation is focused really on that enterprise value creation. So we know that there will be a need to create a bridge or interoperability between the work that the GRI has done and the path the EU is following. The UK has announced from a climate perspective, it'll be that double materiality perspective, reference the ISSB, but also going broader. So, and then in the US, SEC is working on this, but we'll see where they go. So how will we get to that global standard?
Yeah, so the language we use a lot is building blocks. It's important to think that, I think it's unrealistic to think that every regulatory jurisdiction around the world is going to have exactly the same sustainability disclosure requirements. And one reason for that is that sustainability disclosure is often linked to public policy objectives, which do vary by region. So, but what we always, the language we use often is global baseline. Global investors need a global baseline of comparable, consistent, reliable information on core sustainability factors that impact enterprise value. We think it is realistic to establish those under the ISSB, under IFRS. But as many of you know, IFRS, and as Jessica, as you mentioned, is not automatically adopted in many of the countries that use the IFRS standards. They go through an endorsement process in every one of those countries. And Veronica can talk about this in more detail. And so it's that endorsement process that is one of the things that allows for tailoring by region as necessary. But what we really do hope to achieve is some consistent global baseline, so investors like soccer have a foundational level of information that is comparable and consistent around the world.
Fantastic. So we're nearly out of time, Janine, but I'd love to just get one final key message from you in terms of, for investors, for businesses, what's the key thing they need to be doing now?
Yeah. So I really want to direct it to the finance community and the finance professionals who are listening. I think beginning to think about sustainability information as important as financial information. So if you think about all of the controls, all of the governance, all of the engagement and standard setting, all of the resources that you put into production of high quality financial information need to think about that as need to think of sustainability information as now rising to that level of importance. And so I think there is a huge role to play going forward for finance and accounting teams who have the skills and experience around controls and governance over, let's face it, very complex data sets. And I think the finance professionals have a really leading role to play going forward.
Fantastic. Well, thank you so much for joining us, Janine, getting up in the middle of the night. I suspect you wouldn't have been asleep anyway. So really appreciate you sharing those insights, giving some guidance, and just congratulations. I think huge amount of work to get to this point. So a lot of plaudits to you and the team.
Thank you. Thank you. Thanks for having me.
Thanks. So next we'll be coming to Veronica Poole. Veronica, as mentioned, has been part of the I4S Foundation's Technical Readiness Working Group, representing the World Economic Forum. Veronica has been very heavily involved in the whole reporting world for many years, a real expert. And Veronica, welcome to the studio today. Fantastic to have you with us through Zoom. I'd love to get from you now. We heard from Janine the headlines, but coming to the prototype and the detail of what companies might need to know and what investors can look forward to in terms of some of the proposals that have been created. One of the key challenges that we heard from CFOs and investors when the I4S Foundation first did their consultation was around speed. Now, we know with climate, we haven't got years to be developing perfect standards. We haven't got the kind of length of time that, to be honest, the I4S Foundation has a little bit of reputation for standards having a lot of due process, really important. But in the context of the crisis, we can't go down that route. So I'd love to hear more about the kind of work you've been doing to accelerate that progress.
Thank you, Jessica. And I'm delighted to join you on this historic moment. I mean, as already has been said, it is a huge leap for standards and corporate reporting and a big step in our climate response. I4S standards have enabled us to have that financial information at our fingertips, and we're now making a similar first step for sustainability information. I think it is critical. His Royal Highness Prince Charles put it really well when he said at COP26 that we need to marshal the strengths of the global private sector in order to stand a chance of addressing the existential challenge of climate change. And for me, that mobilization includes the need for companies to be transparent and accountable for their actions. And that's what Rishi and Saka were talking about. And that's exactly where the new ISSB and these new proposed prototype standards come in. The publication of prototypes actually shows that huge progress can be made in a very short space of time. And huge progress has already been made. The prototypes demonstrate that they can, we can evolve from what is already there. We can build on the work of the group of five, which combined the energy and resources and the wisdom, the experience of so many sustainability organizations. And I was very pleased to facilitate that work and delighted that we have been able to contribute to the TRWG effort to support the World Economic Forum. So I think those prototypes are a critical first step. They are one essential part of a system change that will be required to create a global baseline of sustainability information addressing the needs of those capital markets, and we can then build from there. But I think it was already said, to be effective, we would need to do more in order to bring the standards into the regulation around the world, together with the associated enforcement, monitoring, governance, controls, assurance, training, because that's what then makes the application, consistent application possible. So it isn't just about those prototype standards. But if you wanted me to elaborate a little bit more, I'd be very happy to talk about what is it do we actually mean by these prototypes and what do we actually mean by mainstreaming. But perhaps I'll just stop here for now.
Yeah, no, I'd love to hear just the headlines on that, Veronica, and particularly I think that as you touched on, there are the two prototypes, so one on climate and one general disclosure requirements. Now, one of the pieces of feedback, of course, yes, this is about climate first, and at COP26, that's clearly the headline focus, but we know, and Saka will come to you after, but climate is not the only issue. Climate also has an impact across a wide range of ESG issues. So maybe you could talk to how companies can use the general disclosure requirements as well to get ahead on issues as well as climate.
So let me start maybe with the general disclosure requirements and what do we mean by that? That is an equivalent effectively of what we have in the IFRS standards, what we call IS1 and IS8. They're the standards that set out how we report on financial matters. And they effectively show how we mainstream the critical financial information. This is what these general disclosure requirements proposals effectively set out. They're proposing to mainstream critical sustainability information. That basically means disclosing that sustainability information in the general purpose financial reporting. So what we're talking about here is an MD&A, an operating financial review, integrated report, strategic report, but it is the main communication to investors. And what's important here is that companies will need to disclose this information for the same reporting period and as their financial statements. That's quite critical because today a lot of sustainability information is reported on a completely different reporting cycle. And we will be needing to report this at the same time as the financial information. And that's where that connectivity becomes really quite important. What is also quite important here is to recognize that the standards are adopting essentially the same materiality lens as financial reporting, and that also will facilitate that essential connectivity. So companies will need to report and determine materiality based on matters that may affect enterprise value. And what does it mean? Well, it basically means that enterprise value, as we know, is determined by capital market participants. So we're taking it through the capital market participant lens once again, and it's based on their estimation of the amount, timing, certainty of the future cash flows, spanning the short, medium, and long term. And the values those capital market participants attribute to those cash flows. Those elements are quite important. So first of all, the horizons. The time horizons are not here just here and now. I'm looking at something today. We're looking at the value today, but the values that reflects short, medium, and long-term prospects of a business. And the attractiveness of those cash flows to investors comes very much into play here. So the disclosure will need to focus on all sustainability topics that are critical to the business. And you mentioned this is not just climate. So companies will have to report on governance, strategy, risk management, metrics and targets. So providing information on all four of these aspects across all material sustainability issues that they determined to be relevant to establishing what is enterprise value, relevant for them. So providing information on those factors will create effectively an infrastructure, if you wish, a requirement for all of us to think about those issues. Now, the prototype is an example of a thematic standard. Janine mentioned thematic standards, and it is very much setting out more detailed requirements that companies will need to report on, including, for example, prescribing specific cross-industry metrics. So everyone will have to report on scopes 1, 2, 3 of the greenhouse gas emissions, and some critical industry-specific metrics. So companies in specific industries will then have to pick up the industries that are most relevant to them and report additionally on the metrics from those industry standards that will be developed and will be based on ISSB standards. So whilst we have only just started on the journey, what this climate prototype shows is that how the future standards will look like from, if you wish, from the general requirement all the way through to the detail. But the general requirement standard already sets out quite a robust framework for us to report across all sustainability matters from day go. Fantastic.
Thank you, Veronica. That was a really great a really great overview. And I think that you gave a few points there that I'd love to come, Saka, to you to just explore in a bit more detail and get your first response. So, of course, a key focus of these standards is investors. Are they going to provide you the information that you need?
Yes, I think it solves first I want to applaud the extraordinarily great work that's done by Janine, by Veronica and others in the team. It is a building block, and we go back to the basics. And something Janine said, we need a common language. So where is the conundrum that investors face? Investors, as I say, are agents, they're not free agents. Some of us are saying to realize value in companies, we are looking at things that actually current reports and accounts do not take account of. And in doing so, in a sense, we're putting a value judgment that's our own, that's outside the common language that's agreed between everybody. What this provides, as we just heard earlier, is a common language that we can begin to talk about both long-term cash flow value, and this is how enterprise value is created, and long-term risks. And once we have that, then we have a common language in which we can say we are using accepted data. And it goes back to the point that His Royal Highness made right at the start when we had this video. The accounting standards we have in general, and I'm always terrified in front of Veronica to say anything about accounting, but bear with me. The accounting standards we have in general belongs in a world that was machine-heavy, labor-heavy, that's not fit for purpose with ideas, computing, value, which is ephemeral, and risks, which are ephemeral. And it is ephemeral because we're not quite sure how bad the risks are going to be. What this does is it brings us into the 21st century so that we can have that common language. So we welcome it, and I think it is a very important step. The fact that we used several streams, and we were involved in the IIRC, is actually important because we all had a say in how it's going, and it means we know where it's going. The fact that it has the stamp of the accounting standard that's agreed worldwide is important because it puts pressure on governments to adopt a version of it. And accounting standards do differ from region to region, but at least it gives it respectability. Suddenly what we do is kind of respectable, which is a good thing.
Let's hope so. And let's look forward to then the next development. So thank you both to Veronica and Saka. We're nearly out of time. I think that there's a lot more that we could be discussing in terms of this announcement. And certainly from A4S, we have shared some initial reactions. So do go to our website for more in terms of how you can respond, for all of the practical guidance that A4S has developed over many years, really helping particularly CFOs and finance teams, but also pension funds, investors and others get ahead of the curve and really embed both the response to the climate crisis, but also some of those other critical environmental and social issues into the heart of financial decision-making. We will be back on Friday for the second of our live from COP26 broadcasts. We'll be joined by some of the leading figures from the finance world, including Hiro Mizuno, the UN Special Envoy, and a number of other leading investors, including representatives from the Impact Investing Institute, David Blood from Generation Investment. And they'll be talking in a little bit more detail on some of the themes that Saka, Rishi, Veronica, and Janine have talked to today. And I'm sure that you'll have all had time to distill these announcements, follow some of the additional developments today, Finance Day at COP26, and I'll look forward to your comments, your questions, and we can get into some of the detail of how we accelerate action by finance to tackle the climate crisis and create a sustainable future for all of us. So thank you very much, and I will look forward to speaking to you again soon.